Quick trip around the charts just to finish off the week where we at. It is Friday. It's halfway through sort of Euro session now. It's 9:08 p.m. on Friday, 26th of June. So look, I'll just fire over these ones pretty quickly. Just a bit of a wrap up of sort of what happened through Asia and obviously now sort of what we're sort of seeing. Halfway through Euro session as well, and this is gold to sort of start off. Now, we did have this little area here. Now, remember, the other day when we got that big sell down, we had this quick little drop through this point here. I covered it on one of the videos. It was a pair, like basically it dropped 30 bucks from about sort of 38 to 03 or 05 or so in like 2 minutes, 3 minutes. It was like a stop point. And as you can see, it obviously became that little sort of resistance point on that real fast sort of bounce back up there. We saw a bounce come up there on sort of Thursday night, sort of, early Friday morning. And then obviously this morning we had this little push down to now overcome that level and move up higher. A couple of things of why this is really so significant, and this actual sell down here was a very important kind of tell for what's actually happening at the moment, because if we make this into like a little range, we could see obviously the buyers are down here, and this is another thing that I constantly sort of talk about. You want us to find a perfectly sort of, maybe not perfectly, but to find a well-structured bottom and advance, you want to break that three-leg cycle that I always go on about. And if you sort of do it very simply here, we've got our drive down, we've found support, we've got a couple of bounces up here, but more or less we've got a bounce up here, we find resistance, and we move down here. And you can see that as this drive that came through Asia on the Friday session went to move it down, we actually, this is the tell part here, we actually saw the buyers from this point down here make a concerted effort to advance. That's what you want to see. You want to see a break of this three-leg structure. You want to see the guys coming from here going, hey, look, we were buying it here, or the people that are selling it, hey, look, we'll try and sell it down. But you want to see the move from here to here from the with the buyers to show that, okay, hey, look, we're advancing. It doesn't mean that, okay, yes, we are going to be turning around definitely. And of course, these things are all sort of relative to the time frames and all this kind of stuff that we're looking at. But let me just put this on a straight line. But the point is, you want to break that three-leg structure, because this third leg is always going to come. It's either going to give us double bottom, in which we could have potentially been looking at a bit of a continued range where it's still a 50-50. Actually, probably not 50-50. It's probably almost sort of more 70-30, excuse me, that we would break down if we were right back to the bottom there, because that then makes this really just a consolidation. It's a range, but it's a consolidation, and consolidation favors continuation. So we look at what direction we came into the consolidation. Well, you got a higher chance that you're going to see a continuation down in this direction. But of course, we didn't get that. So that's just sort of why it's important. But what we have seen is that the buyers have actually sort of moved up. So we know that the sellers are over here. As I said, we saw them when they first did that first little bounce. We saw it through that Thursday, Friday night session. Sells here. So we know that this is the sell zone here. We know that the sellers, obviously, from up here, it's been pushing, they've been pushing, they've been pushing, they've been pushing. All of a sudden now, they've got a flat line on it. So you think, what am I actually seeing here? Well, I'm seeing the buyers are making an actual effort. They're moving from, plus minus a couple of bucks here with change, from sort of 39.60s, it's moved up to 39.80s, 39.90, that kind of zone there. Sellers are still holding still here. This becomes our bounce point. So the way that this structure is going to break down here is we're going to see a little bit of a move up from the buyers. We know where the sellers are because this is our bounce over here. And the same sort of thing with the structure we want to see is this. Now we're looking at a structure, a three-leg structure this way. Found resistance. We know that we've found support because that was part of the move down here. See how it's sort of swapped hands now. Now we're sort of looking at the other side of it all. The fact that it was unable to come down here puts the emphasis back on this level up over here, because we know that the sellers are sitting here. So the assumption is that, whoever's trying to sell it is trying to sell it here again. And if you zoom right in on this, you can see that. Pushed up into here, a little bit of a rejection, push back down, and then obviously now, bang, we'll push through. So now what we've got in terms of this turnaround structure, we've got a higher low, because here's your low here, That's a low, and that is higher than that low, so it's a higher low. And now we've got a higher high as well. So we've got this high here, and now we're pushing through, and this high is obviously higher than this high. So now we're looking at a little bit of a push back up in this direction here, and we're getting that little bit of a breakout over that sort of 40 zone. So that's basically how we're sort of getting a bit of a turnaround there with gold. However, it doesn't mean that we're completely out of the woods, and it doesn't mean that, okay, yes, now game's over and we're coming up here. All it means is that we're not moving further down at this point in time. So what we can do now is we can sort of go, okay, now that we've established that, we've got a bit of a credible base, we're starting to push up. There's other things we're going to have to deal with, but we'll get to those in a moment. We can actually sort of start to build out where may this whole move come to. So we take the top of the move, we take the bottom of the move, we've got the fib set up there. We can see that at the moment we're still only at 23%. Anything under 38% is considered very strong continuation. So just because it's popped through this area here, we're running into the sort of previous little supports over here, is as we move up here, we look for these crossover areas and that where the market's valued it back and forth. Let's get this out of the way. And we can see here that we've got the buyers, and they turned into sellers just over here. So this is going to be the next target, because we know that once price passed through this level and tried to move back up, the market, for whatever way they viewed it, they were selling it at that point. So should they get another shot up here, assumption is they're going to hit it again there. It doesn't mean that it's going to hold. It just means you're going to get a reaction. So this move here, should we sort of hold above this zone and continue up, we're looking for a move up to 40.90. Look for a pushback. Pushback could turn into these areas down here, and then we could sort of look for that next three-wave structure. And there you've got your 1, 2, tackle these levels here to push through and move like that. So that would be the structure in the way that you would expect to sort of see this thing sort of slowly come back up. It's not going to get just one big rocket candle moving up like this. The only time you're really going to see those kind of things, like say these moves over here, this is another area where we saw obviously the buyers were already starting to make that sort of concerted effort. So you got your buyers down here. Actually, so that's your sellers through here. We've got to draw another one here. We've got the buyers sitting here. And you can see that they made the effort to move up to this area over here. And you can see that advance and puts the pressure back on that sell zone and then push through. But what I was saying with this, the reason that you saw this big move here is because we had MOUs about to be signed. There was an external driver. It wasn't normal price structure. It was already setting up for something that looked like it was about to pop through anyway. But as you can see, big sort of move down, up, down, couple of tests at that resistance. And look at what we had down here. Big move down, couple of tests at that resistance, and then eventually pop through. This one popped through and put large candles in it because it had the headline to sort of back it up. Hey, yeah, we got the MOU coming, all that kind of stuff. We know how that really played out in the end. Anyway, point is that most likely this is going to keep grinding and it's going to move up, and we're going to see sort of like, maybe 40.90 by the end of the session. And then if we come back down to these levels here and we see the buyers step up again like this, and this now becomes a buy zone because of the sellers' resistance turns into support, and that becomes a sort of buy area. If we see short positions, so say you've sort of like tried to short this thing, you're hammering it. Right now you're in a little bit of drawdown. You're not going to sell straight away because, that's your textbook stop area. You could very easily just fail and come back down here. We've got a very bearish momentum happening with gold. But if this continues to push up and taps into this next area of sellers, we're going to see a reaction from the market at this level. Should it come back down towards this level over here, anybody that was short above these highs over here is going to go, okay, you know what? I got that one wrong. Fair enough. Now I get out for nothing. If you get it wrong and you get out on the back test, you've lost nothing. You've lost the opportunity, but you need to take the shot. You need to have some sort of risk in the game, of course. But if you can get it wrong and get out for zero and then say, hey, look, I want to short it, where else maybe I'll short it once we get up over here, whatever. That's what people will do. And if they're short here and they close their short positions, they need to buy those back. And that's what's going to give you momentum for this next leg to push through here and potentially come up and retest these levels here again and see if the sell zone holds and if the sellers want to move up just a little bit higher there. And that's your sort of structure of how we're going to see sort of gold potentially recover a little bit more. But it all starts with this break of the structure coming down here. It all starts with the idea that yes, we're coming down, we've got resistance, but the higher low. That's your first signal here. This is your confirmation. And now we just sort of see how long is this move going to carry on for and sort of where are they going to take it to. So, yeah, it is looking a little bit better for gold for downside at this point. We did take out these lows. If this goes high enough, you know, there'll be people maybe talking about, hey, you know, they've got all these trapped sellers down here. Because remember, you know, down here, there's a lot of people that were selling this thing with the idea that we were just going to go dribble, 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 and then down here. Anybody that was short in this area here are now underwater. They're in drawdown. They're starting to sweat a little bit. So, you know, of course, people are trading from different levels and different risk, amounts and different sort of position size, all this kind of stuff. That's fine. But the general idea is exactly that. If you'd shorted on the idea that, hey, we break the lows over here and now we're down here, so let's short because the textbook says lower low means you're going lower. Yes, it does, but it can also come up here, squeeze all those positions out, and then come down. So these are why we'd be looking at these fib levels here. If this thing really catches on, we could go back about up to like 4,200. Don't think we probably will at this stage because I do think the dollar is really just too strong to allow it to get too high at this point. But it's the end of the week. We got end of month flows, all these kind of things. Some crazy stuff can happen. But the short here and now, it looks like we're sort of proving ourselves above this level. I would like to see this actually continue, like not just get above here, but I want to see this actually pop up now, get to the 60s. You get to the 60s, I think you're pretty much guaranteed to sort of come up and test those 90s. Should you get that, then we get a little bit of a pullback and we look for that sort of structure to play out. Have a look at silver quickly. Where are we at actually? Which chart were we using for silver? So silver, look, silver's a little bit different because it has actually sort of come right down. And look at this as a little trap here. So this is your little support here. This is where we know that buyers were. It was actually two levels because you got the very low down here, but I wouldn't really count that because that's just a wick area there. But this is an area that's been touched a couple of times. Really did trap a bunch of people here. So if we sort of have a look at sort of where it wants to get above here to sort of see if we're going to see any more sort of gains with silver, well, let's build it out a little bit. We got a little bit of a zone here. We've got a little bit of a back and forth. It's actually a very choppy chart, to be honest, in that down here. This is on the 1 hour. Does the 4 hour make it look any cleaner? 4 hour looks a bit cleaner and shows how that support area, actually sort of rings a little bit sort of more true. So one thing we can do here. So what we've got here is obviously this is your support area. This is a little bit of an overshoot. You never worry, but I don't worry so much about the wick on the actual initial move down because things can get overblown. This wick here though, I think is kind of important. And it means to me that, you know, there is a high chance that we do get a bit of a bounce through here as well. Reason for this is because sort of like, you know, people be looking at this and they're going, okay, well, you know, this thing's come down. Okay, well, look, it looks like it's sort of ranging. That's cool. Well, you know, I watched my YouTube video and they said put the stop right underneath the zone because if it's going lower, then it's, if it's going lower, then that means continuation going down further. Yes and no. Yes, it does. If your candle closes down underneath that zone, then yes, continuation down. High chance. Look at this example just up over here. See how this is in a little range here? Look at this little, it's got a little hammer candle. It's got a little pin and then a little body up the top over here. This thing at this stage over here was building like a little range. Your support down here, these are where your buys are. But before it moved up, look what it did. Shot right down and then moved up. Now, again, why is that? Because there's a lot of stops and liquidity sitting in these areas here. Because a lot of the people sort of like, you know, it's not generally, you know, I mean, to continually fall for these things, you have to be pretty, like, to be honest, in that fairly novice with it all, to have your stop so tight that it's like right underneath these sort of things. But, you know, there's endless streams of people that in retail that sort of jump into the market and that is what they do. So what do? They put their stops down here, price looks like this. It looks very much like coming down, dribble, new low, big. At one stage, this was a fat yellow candle. Well, for my case, yellow, but red candle, whatever, bearish candle. And then it came back up, flipped, and look at the end result. Once it passed that bounce high, continuation up over here. Now, the wick on this one isn't as sort of prominent as we saw over here, and also this bounce came on the next candle. So the conviction of this being a base isn't as much as this, but to me, it is still the same idea that you've got support through this area here, you've got a little wick down, and then a big sort of bullish candle coming up afterwards. The point is that still above 59.25, most likely going to see a little bit more upside here. That's a direction one. So we can start to build this one out as well. We can go, okay, well, here's our little Fibonacci from the top over here. Clean it up a little bit. Now, we've got actually, that's not from that point. Let's put it up on this one here. So we've got a high, we've got our low, and we can see where could this thing potentially come. And this is where you line them up when you look for the confluence of stuff. So we've got a big, strong support here. This is that area that I was just talking about. Got tapped into here, went underneath. Backtest didn't even quite get there, so they were really hungry to get out of this. Bang, they pushed it down. Should you get a move back up to here? I don't think even up into that zone there, but I would say probably up around this zone here where we had a bit of sort of congestion. You can see that the market was very much sort of thinking about it two ways over here. I would say that's probably your short-term target here for silver. Was that little line? Here we go. So you break above here, you'll see some reaction there. See what happens with it, and then again, you want to see a progressive move up with the buyers. So this isn't as a strong bottom as we have seen with gold, in my opinion, because gold, we saw a concerted effort for the buyers to actually push up. Here, we've just got the sort of the telltale signs of a little bit of price action that happens before a move, i.e. sort of move down, take stops out, and then sort of fire back up a little bit higher. But to me, gold looks like it's got a better conviction to go a bit higher, but they'll both move at the same time, and they'll both move if the dollar sort of continues to come off. So having a quick look at the dollar, we are sort of back testing this area over here. So it's a problem with having about 8 of these charts. We do get the arrow off this one at least. What the hell's going on here? What I click? Take this off here, take that off there, make it a different color, bang, here we go. All right, so we had a little bit of a rising support coming up through here. I did a couple of videos actually this morning, start of Asia Open, and made a couple of calls with downside basically in mind for the dollar here. We're not out of the woods by any means. This isn't necessarily coming down here, and this is why I do believe that any sort of move down with metals is not necessarily the time that we say, hey, we're going all the way to the top. And even at the moment, it's coming back into retesting this previous wick high over here, pretty much almost to the point there. We can look through there. So very much a tip here, very much a tip here. Market's thinking about it. I don't think this will necessarily hold. I do think we'll probably end up sort of coming back down to around, I think I sort of put it at 101, 190, those kind of areas. But I would say most likely down around this area here, oops, we would see a bit of a reaction. In dollar terms, well, as in US dollar terms, and sort of then how much that'll react to the other markets, that can still get that pop. You know what I mean? This is where we started the session today. We moved up, gold moved down, but you've gone from 58 down to 23 now, and that's equated to gold moving about $70. So if you look at these things, again, that's not a rule of thumb or anything, but you know, if we look at, if that were to sort of just be, this is just purely making it up, but like, say you got, you know, what, 2/3 of that, that could still see another sort of $40-50 or so up on gold, which then takes us up to, what were we looking at? I think we're at 40.50 now. 40.50 now, and we're looking up at 40.90. Now, that's not a technical thing. This is me just, that's pure speculation of it all. I'm just saying that sort of, should we break this little level here that it's trying to hold, which is, you know, there's a reason, small reason, but there is a reason for this thing here to be bouncing from this point here. is what we're sort of seeing. Let's just change the color on this just so it doesn't make it too confusing, because the two lines don't relate to each other at all. But the point is with this that, you know, there's a reason why this thing may try and stop here, apart from the fact that if we zoom right back, this was another zone that we had marked out here. So, you know, there is a bit of thought around this level here. So as you can see, the market's trying to sort of hold at this little point here. It's actually also the measured move, which I actually sort of did. So this is another one here. You can see the charts. I put them all on X this morning, but let's go bigger. You can see this. This was this little bear flag we came through, 110, 101.15 with this particular chart. Some of them have different readings with it all, but that's another sort of real reason why you're sort of seeing these moves. So you're seeing a couple of things line up to sort of say, hey, let's stall at this point. Doesn't mean it's going to hold at that point though. And when we sort of get that, okay, sweet, let's come there, let's stop there. Should we break that? That's when you'll see gold take its next leg. And that's what we'll be looking for the dollar to come back down into this area and then see a reaction. Because down here, you know, give or take a couple of points or whatever, is where we've seen the market try to do it previously. On the way up, this area here, they used it as a little buy zone. There's a kind of little bit of a back and forth around this area here. So should we see them have the option to buy down here, doesn't mean it'll hold, but it means you'll probably get a reaction. That'll probably come, as I said, break this little line here. I expect gold to sort of take another little leg up towards 40.90 and, you know, a couple of bucks either side in change, while the dollar sort of moves down around here, and then we sort of see a bit of the flows move back and forth between the two. But for the time being, we've got a high time frame resistance with the dollar. We've got a lower high, we've got a lower low, another lower high. It's in pullback mode. But all in all, it's a sniff off the ties. So even if we do come back to this level here, it is still incredibly bullish. And this is why I don't think it's necessarily time to be sort of saying, hey, look, you know what? We've got a bottom in metals. This is just a breather. There was a reason for the market to be selling and take some profit here. This could continue and end up sort of coming all the way back down to 120. It's still less than the 38% of this move. It's still very bullish. You're still going to have your third leg. Like basically what we're doing is we're doing the first leg here. We're starting to see this third leg. Most likely a third leg will come healthily to 38%. Then you'll see a move here, and then that'll be your way that you break through. So that 3-leg structure, then this becomes leg 1 on your new structure. And on it goes. On and on it goes. But that's the bigger picture. Short term in that, I am sort of looking for this probably to sort of continue down. It's a little bit oversold on the 4 hour here, but unless something happens and it sort of does a sharp 180, these things will generally sort of stay a little bit oversold for a little while before starting to turn up, which could definitely get the price down another 30 points or so, at least on the dollar, I would say. And finally, just have a look at Aussie just to finish it off. So Aussie's not really sort of doing a great deal, to be honest. I do still think we could potentially see a little bit higher, but the longer it takes with not really doing much down here, the more susceptible it is. You want to see this thing react as the market's selling off. Like obviously, Aussie's not part of DXY, but you want to see the dollar, it's the Aussie dollar. You want to see that react to weak US dollar sentiment across the market. So although it's not part of the DXY, it is obviously across with the US dollar. So you want to see that while the market's selling US dollars against euro, against, we're seeing it sort of react against the metals and these other markets I've got correlation with. This is the time that Aussie needs to do something, because inevitably the market will start buying dollars again. And if Aussie at that time has not even been able to manage to get up to 23 or even up to the 38% of this last leg of the move, it makes it very susceptible to breaking down and breaking a lot harder to the downside. You need to take advantage of this point while the market's getting rid of a couple of US dollars. And the fact that they're not buying Aussie while they're selling US against other currencies is a little bit of a concern. You got to think with Aussie as well, it's very it's a risk asset as well. And today you had, I think it was the Korean market was down 8% and got put into halt, which is crazy. Like, we haven't had something like that in a long time. Nikkei swinging a couple of thousand points back down to major supports as well. So, equity markets are pretty crazy. Like, I watched the US Open last night, dropped 100 points in like 10 minutes. Then it bounced right back up halfway and then just chopped around, really. So equity markets are a little bit on edge, and that's why Aussie is not responding, in my opinion, as much as the US, some of the other assets that are related and correlated with the US dollar. Short term, in terms of straight technicals, you want to see it above 69.30. Above 69.30, I think sort of 69.80 would be a nice retest. It would be a nice clean structural retest, and then we can start to enter into its third leg coming down over here. But to see that happen, we're going to have to see continued weakness with the US dollar, and we're going to have to see metals obviously continue up a little bit, and we're going to have to see some stabilization to upside with the equity markets. If you get those three things happening, Aussie should appreciate a little bit better. But at the moment, it is really struggling. It even tried its little lower wick down the bottom here to grab it, but there's no fireworks to come up over here. As you can see, sort of like if you look at the structure between gold, it's breaking its bounce high. Aussie's trading a little bit more like silver at the moment. As you can see, it's not really breaking. It hasn't broken those bounce highs yet. And Aussie is actually sort of very much deeper and also sitting over here. So I think Aussie is still a little bit susceptible at this moment, but if the equity markets can turn around, that might give it a little bit more confidence and give it a little bit more of a push up. But certainly at the moment, unable to get above that 23% and out of this little bottom range makes it very susceptible for another leg down if they start buying the US dollar very quickly. All right, that's it from me.